Hey guys, welcome to this video. Today we'll be continuing our basics of the stock market, and this is part 3, which will be talking about order and prices. It'll be a relatively long video because I'll be going through a really detailed example on how the prices are being affected. And let's get started first of all on the order and the order types. So previously we talked about to make a order to trade the stocks, you need to first discuss with your broker. Your broker is the one that's going to be submitting your orders, right? But the exact discussion with the broker specifying the stock, that is also very important. So today, let's talk about that first. What is within the order? You'll include the specific stock that you're talking about, the price, the quantity, and the type of order that you want to make. So let's use the example of that clothing store that we previously talked about. Your clothing store, you're the owner, right? So when we talk about the order, the first thing that you gotta know is the ticker. The ticker specifies the company and it is the abbreviation of the company. So for example, Apple's ticker is AAPL, Tesla's ticker is TSLA. It is actually quite funny that a lot of the time people do mess up on the ticker. Sometimes they sound and look very similar to each other, and there are times where a small company all of a sudden jumps up in price because people misread their ticker because of some reason. So that's very important to make sure that you get the right ticker for the company that you want to purchase. You can Google it very easily, but make sure that you take the time to understand that. Second is the side, which means that whether if you want to buy or sell for the order. Third is the type of order. And there are many different types, ranging from very basic order types to more advanced order types. Today, I'll just discuss the basic types. First type of the order is market order. This is quite simple. It just means that you're telling the broker that you want to buy or sell the order at the current market price, no matter what price it is. So let's say you want to buy Apple's stocks with a market order. That means whatever the Apple price is right now, $150, $160, $110, they will buy it. The broker will execute the order for you. The second order type is called a limit order. So the limit order just means that you are telling the broker to only execute your order at the price that you're specifying. So you try to get the best pricing, so that way that you avoid any sudden volatility that happens, right? So for example, you can specify your limit buy order for $10 for the stocks. So the broker will only execute it if the stocks drop to $10. Let's say if it's $11, it will not execute. The fourth thing that you need to specify in your order is the quantity, which is the amount of shares that you want to buy or sell. Okay, so now we got the order details out of the way. Let's talk about what makes the price move. This is a very interesting topic, and I think most people would think it is the news or maybe government policy or maybe whatever is the earnings report coming out of Apple stocks in the next quarter, right? But contrary to belief, it is not the news, it is actually the orders. The orders are the ones that sets the price for these stocks. So let's use the example again for your clothing company. The ticker is CLTH. And you're going to be trading it at the New York Stock Exchange. So let's talk about a few more terminologies. First of all is the shares outstanding. Shares outstanding means the amount of shares that are issued by the company. In this case, let's say we have issued 1 million shares for the CLTH company. Second is the float. Float is different from shares outstanding because it indicates the number of shares that's actually being traded in the market. And this does not necessarily have to mean all the shares that's issued by the company. Because the company may have 1 million shares in total, but some of them may be locked up, some of them might be owned by private investors and they're not selling it, they're not available for trading. Whatever the reason is, the floats only means the stocks that's available to trade in the market right now. So let's say is 750,000 shares. Okay, so we will actually go through a example of how does this order affect the prices, and I'll come right back with a slide that you'll see. All right, let's get started on our example. So imagine in this example, there's only 10 people in the whole world. I know there is 7 billion people, but let's just imagine there's only 10, and each one of them owns a little bit or a portion of your share, the CLTH company. So right now you can see that there is 10 people that annotated. Some of them own a lot of shares. For example, 40K for the first person, 10K for the second person, 2K for the third person, and some people owns nothing, like the fourth person and the eighth person in this case, right? So each one of them have bought your shares during the IPO, and we mentioned this in the previous video, which means that they bought the stocks at the primary market. Nothing has been traded on the secondary market yet, so there is technically no price, and it is not being sold at the exchange, which is New York Exchange in this case. But now we want to trade these stocks. So how do these people trade these stocks? We also mentioned this just recently, which is they have to send an order, right? So in this case, let's say person 1 wants to purchase 3,000 shares at $41. So they have to submit the order, including all the details we mentioned previously, and hand this to the broker. So previously it will be through the phone, but now you can just enter it in your mobile phone or on the computer. You submit your order, which then send it to the broker. The broker then gets this piece of information and relay it to the exchange. In this case, exchange has a matching system, and this matching system will be matching the buyers with the sellers at their preferred price. And in this case, you can imagine it as a notepad pretty much with 2 columns, the buy column and the sell column. The buy also is synonymous to bid, excuse me, and the ask is synonymous to sell. So they can be used interchangeably, but usually people who trade would prefer bid and ask rather than buy and sell. So let's talk about the scenario where the person 1 wants to buy 3,000 shares for $41. So in this case, this will then go to the exchange. This order goes to the exchange and actually gets placed in the buy column, right? So now we have our first order, but if you look online, there's still no trade going on, so that there is no price that's being set. However, now let's say the second person comes in and he wants to also buy 5,000 shares for $39. So in this case, this also goes to the buy column, but the question here is, which one gets a higher priority? Does person 2 get a higher priority, or is this still person 1's order? So it's actually person 1 that gets the higher priority. And the reason is because of the price. In the buy column, the priority, first of all, goes to the pricing. The one that's willing to purchase at a higher price has a higher priority. And the ones that have a lower price in the sell column will have a higher priority. So if the prices actually are the same, they equal each other between 2 orders, then the one that came first would have a higher priority. So let's say person 2 actually is buying 5,000 shares for $41, same as person 1's price, the person 1 would have the priority because of timing. So this goes to the buy column, the second order, and gets placed after the first order. So now the person 2 comes back and he submits another order and he wants to sell 5,000 shares. So can he sell another, can he make another order for selling even though he just made another prior order for buying? Well, yes, in this case, because the person 2 has 10,000 shares, so he can do both and buy at the same time. So because it's a sell order, it gets placed in the sell column, right? So because there's nothing in the sell column right now, it takes the highest priority. So what you see over here with all these orders is called level 2, or also known as the book. This level 2 or book basically encompasses all the orders from the buyers and all the orders from the sellers, the ones that haven't or waiting to be executed. And so if you ever hear people talking about, hey, I want to see the level 2 or I want to see the book, they're talking about what we're seeing right now, right? And from level 2, you can actually derive something called level 1. And this is abbreviation in terms of information. It only shows the highest priority for both the bid and the ask. So in this case, we can see for the buyer is $41 for 3,000 shares. For seller is $55 for 5,000 shares. If you hear people talk about want to see the quotation for the stock, usually what they want to see is the level 1. Okay, so let's continue. Let's say the person 2 wants to make another sell order for $59 for 5,000 shares, right? So what happens? Which one goes to a higher priority? His previous order or his current order? Well, like I mentioned, for sell orders, right? The lower the price, the higher the priority. Because if you imagine, if I want to sell my stocks, if I'm willing to sell it for lower price, it is going to be executed first, right? So in this case, because of the higher price, it's going to go below the prior order. Okay. So person 3 comes in, and person 3 wants to sell 2,000 shares for $52. Again, where does this go? I'll give a moment. This goes on top of the sell column, right? Because it takes a higher priority because it's a lower price. So now, because the highest priority for the ask has changed, we will see that level 1 will also get refreshed. Now it will show $52 for 2,000 shares, right? So level 1 will constantly refresh because it is derived from level 2, right? And level 2 will keep on refreshing when more and more orders comes in. All right, so person 4 doesn't want to do anything, but now person 5 comes in and he wants to buy 1,000 shares at $50. So this is the buy order. It will go to the buy column. Where does this go? So this goes on top because it takes higher priority because of the pricing, right? So great. Because of that, we also see that the level 1 will also change to $50, right? Over here, instead of previously it was $41 for 3,000 shares. All right, so let's fast forward. We see person 6. He submits an order and gets placed in the middle of the buy column. It is between 50 and 41 because he wants to purchase 2,000 shares for $48. Nothing gets changed in the level 1 because this does not take priority. So person 7 comes in and he wants to sell 1,000 shares at $51. This does refresh level 1 because it takes highest priority in terms of the ask price. But again, no trace has been executed yet, meaning that there is no match between the buyer and the seller. So if you go online, if you see what's the last sold price, there's nothing, right? You don't see anything because there's no match. So let's continue. Person A comes in and he wants to submit a purchase order for $5,000 at a limit price of $46. Sorry, 5,000 shares at a limit price of $46. Nothing gets changed in level 1. This doesn't take priority. Let's continue. And we have person 9 coming in. He wants to do 5,000 shares to sell, and he is submitting it at market price. So this is different, right? This is no longer a limit order. This is a at the market price. So what this means is that it will get executed right away. Basically the seller is saying, I don't care what the price is right now, I want to just sell my shares, right? So this order gets placed to be executed with the buyers. So it will first match with the highest priority. So first we see that someone is buying 1,000 shares at $50. So the seller is going to sell 1,000 of his shares for $50. And then after this gets executed, he still can sell another 4,000 at market price. So now he has to, his price is going to drop because he's still selling at market price to the this order for 2,000 shares at 48. And once this gets filled, there's still 2,000 shares left to sell. So the third person will also get partially of his order filled. Right. So what will this look like? This means that buyer one, the order for the buy order, the top of the buy order, and the second on the list, both of these will get fulfilled. So they're no longer in the buyer's column anymore. The seller, of course, gets fulfilled as well because he sold all 5,000 of his shares. The third one, this purple one, they don't get fully fulfilled. They still have 2,000 shares that they want to buy, but there's no more matching anymore, right? So when this happens, the trade has been fulfilled and has been executed. There's another item that pops up called the time of sale. So time of sale records basically all the trades that has been fulfilled. It includes the time of sale, it includes the price, and it includes the quantity. So as we can see at 9 a.m., there is 1,000 shares sold for $50. The second one is $48 for 2,000 shares. And lastly is $46 for 2,000 shares. The order of these do matter. The reason why the first one is the top of the list is because the one with 1,000 shares at $50 is the one that's being filled first. And then the second buy order gets filled. And then the third one. So with this, we have trades going on and we can see what's the last trade price. And the last trade price is $46. And this will actually be added onto level 1, where you can see what is the price. And the price is simply the last trade price, right? All right. Let's continue over here. Once we fulfill all those orders, we can actually get rid of them from the buy column and the sell column. So now this is the ones that still needs to be filled, right? So we have person 10 coming in and he wants to buy 5,000 shares at limit order for $53, right? So this is a limit order, first of all, it's not a market price. But because it is higher than the current sell price or the ask price, so it gets fulfilled immediately as well, right? So over here, what happens is that the buy order gets executed against the highest priority sell order, and the sell order gets executed, and the second sell order also gets executed because it is still a lower price compared to the buyer price. So the question is, what price are these stocks being sold at? Is it at $53 or is it at whatever the seller is asking? Well, it is at the price what the seller is asking, right? So the price of the sell indicates what is being sold to the buyer. So in this case, on the time of record at 9:01 a.m., so slide time has passed, $51 for 1,000 shares and $53 for 2,000 shares, right? The time doesn't change that much is because these orders are executed on a nanosecond. It's very fast. So even though there's multiple orders that are being fulfilled, it is done almost simultaneously. Okay, so again, when all of these orders gets fulfilled, they are removed from the buy and sell column, and the level 1 will also change accordingly. Okay, I hope you found the example intuitive. Let's go back to our original question. What affects the price shown for the stocks? Is it the news? Well, no, technically it is not because of the news, because it is because of the orders of the market. As you can see just now in the level 1, the price that's shown is the last order that's being executed, the price of the last order that's being executed. So in this case, that's what affects the price of the market. Of course, we can argue that if the news comes out about how good or how bad a company is doing, that could affect the sentiment of the market. So people may be selling their stocks or they may be buying of the stocks because of the news. But it does essentially boil down to supply and demand. If people are not selling their stocks and if people are not buying the stocks, then the price would not change, or it would change very drastically, vice versa. You know, when some people ask, why do the stocks drop even though there are good news about a company? Well, again, it is not because of the news itself. And oftentimes the news aspect are already priced in when we're talking about the market. So for example, recently when the interest rates are increasing, the price of the market has not changed. And why is that? And most of the time it is because that aspect has already been priced in. People have already expected the interest rate to be increasing. So the market was dropping quite hectically much before that already. So that aspect was already priced in by the market. Let's also go through some terminologies, right? We talk about the bid. Again, the bid is the best price you can buy at, and ask is the best price that you can sell at. The difference between these two is something called a spread. So the spread is pretty simple to understand now that you understand the concept between a bid and an ask. But why is the spread important? The spread is important is because let's say if the bid is $50 and the ask is $52, if you want to buy the stock, how much can you buy it at? Well, it'll be $52 because there's only sellers that wants to sell it at $52. No one wants to sell it for lower. So if you buy it at $52 and then you want to sell it immediately, how much can you sell it at? Well, you can only sell at $50 because there's only people that want to buy it at the best price, which is $50. So that means if you trade the stock by buying it and selling it almost right away, then you'll be losing $2 already. And that is the spread. So for trading, this means that you want to avoid high spread most of the time. But if you cannot avoid it, that means you don't want to make too many frequent orders, especially in a short period of time, because you'll lose the value just because of the spread cost. Usually for bigger companies, the spread is actually quite low. For example, big companies like Apple, Microsoft, Google, Facebook, etc., they usually only have spread on the cents value, sometimes even just 1 cent. So it doesn't really matter that much. But for smaller companies, the spread could be much bigger and could sometimes range to the dollars. Okay, so this is a really long video. I hope you did enjoy it and get a lot of information out of it. If you have any questions, please feel free to leave in the comments below. And please remember to like and subscribe to the channel. Until next time.